Good morning, traders. Today is Monday, the 25th of July. Let's go ahead and get started. Here's the fine print. Ask that you pause your player. If you agree to what we've got here, hit the play button. This is important to you. It's important to us. Protects everybody. Market model via the Cumulative TIK. This is the ARCX, and it is still showing quite bullish despite the pullback on Friday. This is where we get this crossing of the Cumulative TIK above the shortest term moving average. If you got in way down here, this would be JB, one of our traders. One of his profits, take profit signal. We're looking for a continuation to the upside here, but if we get a breakdown today, we want it to remain above this historical moving average ribbon. It's worth noting that the ribbon is in a fourth day of its uptrend, so 1, 2, 3, 4. And when we take a look at where that is, that's in the bin between 3 and 5 here. So basically we're sitting right here. We've had 5 occurrences in the last 10 years where the signal terminated after 4 or 5 days. This is a two-day width bin. So you can see that when this thing catches the trend, it keeps you in the trend, and we have every expectation to ride this thing as long as we can. So if we get a continuation pattern, that would be your signal to enter long. I would wait until you get that continuation. If we do get a pullback, just wait and see where it comes to. So long-term trend up, short-term trend down, wait for a continuation. Index conditions gotten a little weaker. As we all know, Friday was a slight down day. We started on Thursday with, we were above something we call parity. It's where the net negative gamma and the net positive gamma are balanced, or even now favoring the net positive gamma. This was the first time this has happened across the board, and on Friday we saw that reversal. So where we're sitting right now, going into Monday, is we had short-term negative gamma added. This is in the form of puts. And we had short-term positive gamma, which is in the form of calls, come out. And this is consistent across the SPX, the SPY, the Qs, and the IWM, which was and continues to be broken. The VIX, if anything, just note that the zero has moved down just a little bit compared to the previous day. Why that's important is that shows puts being added and calls being closed, shifting the complex to the left to a lower strike. That being said, look out here in September. We've got more calls being added in August, September. Then you can see we actually had a large number of calls, or puts, excuse me, being closed here, and some puts being added. But look at the magnitudes. It's always good to watch the magnitude scale here, and you can see calls are going in the VIX, which is positioning for maybe a longer term volatility play. Dominant strike is 30, and you can see where some of the closures into Friday where they occurred. True delta and gamma zeros, we did a video on this. I urge everyone to watch this. This is of the SPX complex, the combo, which is the combination of the AM and the PM settled, PM settled. A couple key takeaways. The blue lines are consistent across all 3 charts. The red line is the true gamma zero. The yellow line is the true delta zero. You're going to be hearing more and more about this. We're becoming enamored with the clarity that these zeros are providing. Structurally, what we're starting to see is maybe a little bit of an uptrend. We're not going to put a lot into it. We've seen this before. We've seen price above the GZ and TDZ. What we want to see is some fairly aggressive moves up in both of those. These are reflective of the option structure, have nothing to do with price. And why that's important is if the option structure continues to point down, we're going down. We're very, very strongly convinced that price follows the overall center, or the zero, as denoted here. And you can see in the AM settled, which is the mothership, the largest trading instrument in the world, 4.5 trillion or so in equity market trading. You can see that the delta is heading down, the gamma is heading down, and we're waiting to see, do these turn up or does the price turn back down? So we'll see. You know, your crystal ball is as good as ours, of course. We're extending this now to the SPY, the Qs, and the IWM. I don't have the chart prepared for the Qs, so that's why the place setter is sitting there, placeholder. This goes back a little bit further. We've got some data back into the beginning of the year. I'll just leave you to pause and watch this. Note that IWM continues to be broke, although we did break above and spot price above it, something to watch. You can see historically when that has occurred, it's not lasted for a very long time. So again, we're going to want to see what happens here. IWM is noisy, choppy, very, very difficult. The SPY, if you go back one slide and you look at the PM settled SPX, you can see how tightly bound the gamma and the deltas are here. If you look here at the SPY, you can see they're also tightly bound. This is, these trade 0 and 1 DTEs, very, very liquid instruments are used to play in the very, very short term, and hence why we think the structures of both the SPX PM settled and the SPY are so closely coupled. You can see though that once you move above this, we don't stay above this regime since the beginning of the year. We have not stayed above the zero, gamma zero for too long, so just be aware of that this might be the opportunity to get some downside protection in place. Key levels for today: 4,005, you can see a sign change here. We're down here at 39.61, which is down in this zone right in here. Almost sitting, if you look here, we're going to transition through the 4,000 with a slight net negative in terms of the overall gamma. Why this is a big deal is 4,000 remains dominant. We want to pay attention to that. But to the downside, I also want to call out the 39.10. This is the JPM long legs, long put legs that are expiring this Friday and will be rolled. Why this is a big deal is if we remain above this, this has a dealer reaction. If we drop below this, has another dealer reaction. I laid it out in the channels, SPX channel this morning in the Discord, and would urge everyone to come in and take a look at that. 0 DTE, the range expected, just to put it in perspective, 38.80 up to 40.45. That's a very conservative expected move range that we're looking at here today. If we do move up in the 0 DTE, you can see that probably above 40.10, 40.15, it's going to be really hard to see any major contribution from the 0 DTE. The structure is not very clean also to move up. This boxed area is what we call the transition zone, and it's where gamma moves back and forth. And you can see that it starts pulling in net negative right here at about 39.25. Again, that 39.10 is the end of the week, so we are with JPM, this is the 0 DTE, but you can see we are losing some of the negative gamma there, and this will continue. You'll see this behavior as you go through this week also. So it'll be interesting to see how we adjust for that 39.10 if it's adjusted out of there or not. The AM and PM net positive gamma above that 40.10 area. You can see the 4,005 is where those JPM short calls are. We're having trouble in this area. We were on the path to actually seeing this turn green last week. We're not. It's remaining red. In fact, I would say the delta notional at 4,000 has gone from a positive value back down into a negative value. So we've got this pocket of negative net delta notional. And then we've got, contrasting, we've got a very, very large gamma level here at 4,000. When we see mixed signs across the delta level to the gamma level, it's a pausing area or a area of liquidity, while either puts or calls are absorbing what's at this particular level. You can see here we've got the COI, the call open interest, and the put open interest here still sitting at 4,000. They've been at 4,000 for some time now, for months, and basically is unchanged. So here we are down here at 39.61. and we've got to push north. If we do push north, it's going to be a little sticky here, but if we get above that, you can see 40.10 up to about 40.25 here. An area to pay attention to, fairly small level, and that opens the door to 40.50. So we think this is very, very possible, and you can see the gamma levels growing. Visually, it looks like this. So here's the 4,000 strike, here's that 4,005 strike, which is the JPM, 40.50, 4,100, 42 has resumed the upper dominant plus GEX. We closed right here at this transition. We typically do this, we see this all the time. We called it out on Friday. Transition was sitting right very, very close to 39.50. Zero DTE action on Friday shifted it up just a minor amount, which is why we closed, most likely why we closed at 39.61. Down here to the left here, 39.15 is here. Here's that 39.10. You can see it's just net negative gamma all the way on down from here. 3,600 is growing in dominance, so we're seeing puts being added down here. Just pay attention to that too. So what's the summary for today? The market model, short-term trend. Indicated on Friday, protect some profits, the short-term profits that you had. If you're a short-term player, remember all these long-term trends begin with a short-term entry. Long-term trend is bullish and it still remains intact with the obvious caveats that I talked about. Daily change in the wing charts is showing the short-term puts being added, short-term calls being removed. Keep track of that too. We were in a pretty good shape to expand on Friday going into the day, and then it all reversed, so be aware of that. Zeros of the complex are moving up. We feel that that's very, very strong. We need more of it, of course. Still looking at that 4,000, 4,005 as I was just describing, 39.10 also to the downside as I was describing. Watch that, and then downside protection continues to erode. We're not, if you look here, these levels are minor compared to what we have up here. So just be aware of this, and I highlighted on Saturday morning in the questions channel in the Discord, somebody asked how would be an example of downside protection. So I laid out a collar and how we would use the gamma levels, etc., to choose those that collar. So with that, hopefully this puts you on the right path for the week. If you like today's content, come join us at GammaEdge.us. Over on the pricing tab, there'll be a sign-up page that you can click. That'll get you into the Discord. In the Discord, we have a 14-day free trial. All the tools turned on for you. A lot of great people, a lot of new people recently joined, so I want to thank everyone for that. GammaEdge is on Twitter with an S, and then here on YouTube, of course. If you like today's content, smash that like button. Let me know that you like today's content. And of course, subscribe so that you get notified next time we post something. So with that, I leave you. I hope to see you in the Discord, and make it a great week.